Hey everyone, thanks for coming out to our webinar. My name is Zach. I'm with the Bayley-Hay team, and this is my partner Neil. Hey Neil, how about you go ahead and introduce yourself?
Hello, thanks for coming out. I have just a quick little background. Zach and I have been doing this real estate business combined now for about 50 plus years, and we absolutely love what we do. We're here to help. And I think, given the fact that I've been in it 40 years now, that I'm probably older than maybe some of you watching this. So, anyway, we're here to help. Zach, back to you.
Okay, yeah, that's great. Like Neil said, he's been in real estate for over 40 and I'm over 10. And yeah, we're looking forward to helping you guys. So let's get into our webinar. Open up the screen here for you guys and let's get started. All right. So we wanted to jump right into things with you guys. So the first part of our webinar we want to talk about is what the actual journey looks like and what we'll be touching on throughout this webinar. So as you can see, there are quite a few different categories here, which we're not going to go into too deep at this moment, but we just wanted to get you guys prepared for what topics we're going to cover. So we'll quickly run through them. The first step we're going to be talking about is choosing a realtor. Second step is your pre-approval and knowing your numbers. Third step is choosing the type and style of your home. Then you go into choosing a home to put an offer in, and then preparing said offer, then negotiating, and then what happens once you have gotten acceptance, and what is the process from once you have a fully firm deal, which we'll explain what that means exactly, to the day that you get the keys, and then what happens from the time you move in and beyond. So that's the overall layout for what we're going to be talking to you guys about here today. And let's get into the first step. All right. So choosing a realtor or ending up with one is a good uh, topic to start with. Now, something you want to keep in mind is the people closest to you will absolutely have your best intentions at heart. We do not question that whatsoever, but you do need to be careful with who you take your advice from. You want to make sure that they are experienced and educated within the real estate sphere, as there is a lot of public information out there. And due to that, there are a lot of people who think they know everything that's going on, but there is a lot that goes on. And for people who have full-time jobs in other arenas, it might be hard for them to fully be able to grasp all the details and nuances of the real estate market. So those people may be unintentionally giving you bad advice, obviously with best intentions, but you just need to be aware of who you're taking your advice from in your own personal sphere, because we all seem to have one or two of those people in our worlds where they seem to know everything about everything, right? And would you necessarily ask that person about the dental work that you just got done? Obviously they're not going to have the knowledge or the requirements to be able to tell you whether or not your root canal went well. So uh, we work in this market and study it daily to provide you with expertise to walk you through every step of the way of your real estate journey. Now, with that said, as I said at the start, I do want to just make it very clear that we think it's very important to have your family support and have their presence throughout the process of you purchasing a home. Um, but again, just want to be careful where you take your advice from. Now, choosing a realtor or ending up with one, that is an important question. One of the issues buyers can run into when ending up with a realtor, and the way you end up with a realtor in this definition would be you're just looking at houses casually on your own or intensely on your own, and you find a house on 123 Main Street. You call the listing agent because, hey, the listing agent's going to know the most about the house, most likely, right? Um, so the way when you end up with somebody in that scenario, something you want to keep in mind is real estate is very much a sphere of influence and referral related business. As an example, over 70% of our business this last calendar year came from clients that we have an extended relationship with or have been referred to us by a trusted friend or family member. So in those situations, which is 70 to 80% of the time for most realtors, there's going to be an extended relationship built. And think about it this way: if you had an extended relationship built with someone, call it 5, 10 years, whatever the case may be, or somebody you have an extended relationship with recommended this person to you, would you have an equal relationship or equal um, kind of representation with both sides if you had met someone today versus the person that you've had a quality relationship for 10 years? And that's the dynamic, right? Is yes, you're going to the listing agent because they are most intimate with the property, which we totally understand that. However, on the other side of the coin, they also have a fully established relationship with their seller in most cases. So if you can find yourself and choose yourself a realtor that will represent you throughout the process, not only for that house, but for any house that you come into contact with. Now you're building a sustainable, hopefully long-term relationship with a realtor that is going to have your best interest at heart and be looking out for you no matter what, and not trying to, sell you their listing. So that's something that we find is very important in our business is we want lifelong relationships with our clients, and we're looking to build those relationships, and that is something we just think is very important. Now obviously we would prefer you work with us, but if you didn't work with us, we would still highly recommend that you use this process in finding a realtor that works for you and not just ending up with one because they have the listing of the house that you're interested in. So hopefully that's helpful for you guys, as it's been helpful to many of our clients to build those lifelong relationships. Anything you want to add on to that, Neil?
It's just an extension really of what you said, Zach. Protection, I think, would be the word that comes to mind. You need to be protected. And sometimes, because not a lot of people can, as Zach is saying, can navigate two relationships that in some instances are diametrically opposed with their intentions. One person wants to get a great deal when they buy, another one wants to get top dollar when they sell. How does an agent navigate that? Which way are they going to lean towards? Right. So it's very important, as Zach is saying here, is to choose your own representation, not only to take care of your needs, guide you, advise you, but also to protect you and fight for you. This is really, really important.
Absolutely.
Yeah.
That's a great finishing point there. And so, yeah, take all that and kind of sit on it and think of it on how you'd like to proceed, how you'd want to proceed throughout your process. But those are all very real points and things that come up in our clients' daily decisions. So we just wanted to make sure we touched on that for you guys. All right, going into our next stage here is knowing your numbers. So as you can see, we're talking about banks and mortgage brokers and pre-approvals here. So something you want to think about as your first step when you're looking into getting approved for a mortgage to potentially buy a house. There is the option of going between a bank and a mortgage broker. Now, Neil and I have been in real estate for a long time, as we mentioned, and obviously have experienced both sides of this coin. And in our opinion, it is much more to your advantage to go to a mortgage broker, as the banks can be very cookie cutter. You either fit into their profile or you don't, right? If you're slightly outside of the lines on, a key category for them, there isn't going to be, oh yeah, we'll try and make it work type of conversation. It's going to be, that's unfortunate. Here's what you need to do to fit into the box. And when you're looking at a mortgage broker, they have access up to 40 different lenders, aka institutions that would be providing a mortgage for you. And what they can do is they'll take your profile and they'll put it into their system, send it out to all 40 of these institutions, and the institutions are interested in working with you will come back and say, hey, we'll offer this, we'll offer this, we'll offer this. So then now the mortgage broker has the options to lay out for you to choose which fits you best, as opposed to you having to try and fit into a bank's situation. You may end up with a bank, right? That's totally possible through the mortgage broker, but you're not trying to fit into them. People are coming to you based on what your profile is, and we think that's a very important distinction and something that you should take advantage of because we just find it's a much smoother transition for people when they're and less stress, not worried about am I going to fit into their criteria and what do I have to do to get a mortgage, etc. And you know a lot of times people that go to the banks, you're just another number to them. And when you go to a mortgage broker, there's a personal relationship built there. And again, that's something that we stress, building relationships and having people that you can trust. And like Neil said, can protect you as you go through this process, not only this time, but all the other times that you look to buy and sell throughout the course of your life.
Zach, I'd like to jump in on that as well.
Yeah, yeah, absolutely.
So, in the case of a mortgage broker, if you go to a good one, they won't what we call shop your mortgage to every institution that they have access to. They may very well know, given your set of circumstances, provided to what based on what Zach said, providing that you are not in a cookie cutter situation. Not everybody else is. Not everybody is employed for the same company for the last 2 to 40 years. Not everybody has perfect credit. Not everybody has the right amount of down payment. So, really good mortgage brokers will end up having an understanding of what is or which are the best institutions that would fit your personal set of criteria. Now, I'm going to go out and a little outside the lines here, and some mortgage people may not like what I'm about to say. However, here it is. Some bank employees are their standards are not as high as, in my opinion, they should be because they're getting a paycheck at the end of every week. Right. So if you have somebody who goes home at 5 o'clock and their ability to eat and take care of their family is not in direct proportion to the quality of work that they produce, then therefore you'll have varying, if you will, levels of performance, which mean AKA service, that could impact you positively, but what we want to avoid is negatively. Whereas a mortgage broker, let's just be really clear about this, mortgage brokers get paid finder's fee from an institution when they place your mortgage with that particular institution. So they have to make sure that they've raised the bar in terms of their everyday service and accountability and responsiveness. Because if they don't do their job right, if they don't do their job right, they're not getting paid. So when you have that kind of motivation, it doesn't necessarily mean that because somebody's on commission that they're going to try and fit you in here, fit you in there. It just means that they're more motivated to make sure that all I's are dotted, all T's are crossed in a timely manner. It doesn't automatically equal, stress and pressure from them to you. So I think that's a super important addition to what Zach was just saying.
Yeah, and I think great point, Neil. And then so just to add on to that is, quality of someone's work and how skilled they are very important. Like top tier, obviously, as far as levels of importance. But in that same category, maybe just slightly below, is availability. And if, like you said, you've got someone who is making an hourly wage, their money isn't changing based on whether or not you commit to them or not. The motivation might not be there. And then also, if you put an offer in and things are escalating and needs to be managed quickly, and they go home on Friday, 5 p.m., you got a full 48 hours that aren't covered,
Well
right? So
said. Well
that's
said.
something you really need to keep in mind as well when you're choosing a bank versus a mortgage brokers. Mortgage brokers are typically people that you will get a contact, good ones, like Neil said. I can't speak for the whole entire industry, but the ones that we personally work with consistently, they are available around the clock. Now, obviously, there's limits, right? Like maybe not midnight, but you know what I'm saying. Like on Saturday, Sunday, it's possible to reach them in a situation where they need to be reached, and we need them involved in order to get the the house for you, right? And that's not the case with people that work at the bank always. So that's just yeah, we've gone a little bit long on this. We just wanted to stress the importance of you know, the difference between a mortgage broker and someone who just works at the bank. All right, so let's jump into the next part of this slide here, just talking about the different styles of rates that you can have. There's the variable rate and there is the fixed rate. Actually, before I jump into that, let's just talk about pre-qualification versus pre-approval. So they sound a little bit similar, and I know some people might get them confused, but we just want to clarify these for you guys. So when when you're pre-qualified from the bank, that's where you go in and you talk to somebody and you say, I make about 80,000, and my debt is roughly this, and I've worked at this place for roughly this amount of time, where there's no verification required whatsoever of your exact details. Based on these vague numbers that information you're giving them, they will give you a vague number back to you. Like, you will likely be approved for something in this range. Versus a pre-approval is where you have to go in and you have to give in your legitimate documents that show the exact amount of money that you make, how long you've been working at a certain place, what your credit score is, what your credit history, all that type of stuff. So they have your legitimate documents, then they put that into their system, and based on the exact details you've given them, that will then uh, formulate how much you're likely to be approved for, which is a much, much higher likelihood of being accurate than the pre-qualification. So now pre-approvals, they only last typically between 2 to 4 months, depending on who you're getting it with. Some of them can go up to 6, but like more consistently in that 2 to 4. So you want to get that right when you're starting to pick up steam and look at houses and being ready to make a move. But when you do get to that stage, it's important to get the pre-approval done right at the starting, because you don't want to start looking at houses that you get really excited about. Then you go get the pre-approval and it comes in, lower than you expected. Now going back to what I was jumping into was the variable rate versus the fixed rate. Variable rate is, when you go in and you get a mortgage, your interest rate, if you get it under variable rate, it can fluctuate throughout the time period. Typically, it's a 5-year, but it could be anywhere between 1 to 5. It will fluctuate with the market. So if the government raises or lowers rates, you will move with the rates as they move. However, if you get a fixed rate, you're locked in at the number let's just call it 5% for easy conversation. If it's a 5% interest rate, you're locked in at 5%, meaning it cannot go any higher than that. And in some cases, it can't go any lower, but with certain institutions, they will allow you to come down with the interest rates, but they won't, but you're safe as far as the interest rates going up. So it just depends on what type of market you're purchasing in, will influence where you should, you might want to put your mortgage. But yeah, those are the two options, and you just want to make sure you are considering both of them when you're making your choice, and doing so strategically. I'm not sure if you want to add anything on there, Neil, before we jump on to our next slide here.
Yeah, I've come across, over many years, people who don't understand the importance of getting pre-approved, so that, and as Zach was pointing out, pre-approval comes with a rate hold. And, some people will say, it doesn't matter to me because I know I'm going to be approved. Well, that's great. But what happens if you're approved at the current rate and the rate goes up? Well, if the rate goes up and you didn't get a pre-approval, although you would be approved even at the higher rate, you're now going to be subjected to and unfortunately be committing to a higher rate than you needed to. So it's not about if you know you're going to be pre-approved. That's one thing. Some people don't know for sure that they will, and other people do. It doesn't matter which way. If you want to guarantee that your rate does not go up between the time that you say you get your pre-approval and the time that you actually purchase a house, providing it's within the rate hold period, why not do it? Like, why do you want to pay? Why does anybody want to pay more interest than they have to the banks? I mean, the bank's profits start with a B, like billions. Let's not contribute anymore if we don't have to. I mean, that's just it in a nutshell, really. So yeah, I would say that's really important. Fixed and variable rates. Zach, I know you already addressed it, but from my standpoint, um, you have to be very, very careful now choosing fixed and variable. This is not the time and place to go over the nuances and such. I think if we're pretty well versed in it, but we also have experts in that arena, and be happy to, if it's just a matter of curiosity as to which way you should go, we can certainly guide you to the right people. And if you want to talk to us about our opinion as well, be happy to do it at another time. Yeah, that's about it for me, Zach.
Yeah, that's great. Thanks for sharing that. As Neil said, we do have experts in the field that we'd be more than happy to recommend you to. Or if you just want to have an intimate conversation, a one-on-one with us, then we'd be happy to educate you in this process. All right, let's move on to our next slide. Now, these are just to fill you in on where down payment can come from. Your typical three are your personal savings, your RRSPs. Also, there's a couple of government programs that you can use as first-time home buyer to have your down payment in there as well as a gift from a family member. Now there are other avenues that you can use, but it needs to be approved by the particular institution that you're going to be involved with. So when you end up finding out, if you go to a mortgage broker, you would mention, hey, this is where my down payment is going to be coming from. Is this suitable for the institutions that we're going to be looking at? And then you can have a back and forth with the mortgage broker, which allows you to get clarity on what to expect. All right, so we're going to talk about the two different types of mortgages, which is essentially the two differences between one is insured and one is conventional. To be conventional, you have to have at least 20% down as your down payment. Anything under that, you're going to be insured. So let's break it down for you. We use the same purchase price for both of these examples. On the insured side, you only need 5% for the first 500,000. So for easy math, we put it up on the screen for you there. That would be $25,000 that you'd have to put down on the day that you are going to get possession of the house. And then 10% from $500,001 to $999.99. And then so that 10% would be an extra 25,000. So you'll be looking at a total of 50,000 as your down payment for a $750,000 purchase. And if you are looking in the million plus, anything that goes over $1 million, so from that $1 million plus mark, you have to pay 20% on that amount. Now, when you look at the conventional side, you need 20% down in order to qualify as a conventional mortgage. So again, we put the math right there on the screen for you. So you would be paying for a $750,000 purchase. You would be paying an additional, additional $100,000 down to get that 20%. Now we've put a little a breakdown on the screen here for you to talk about the insured. So basically, the insurance, the reason it's called an insured mortgage is there is an insurance that protects the institution, not you, the consumer, but the actual institution, against losses in the event you stop making your mortgage payments and default on your loan. So there is an insurance that you would be paying on the mortgage to the bank because they've given you the opportunity to secure a mortgage for less than the typical down payment percentage. Hopefully that is clear for you guys. And if it isn't, by all means, just send us a message and we'd be happy to walk you through it. As I know it is a lot of numbers to take in at one time, but we just wanted to make sure that we shared that with you. And so just to summarize it for you at the end here, The advantage of an insured mortgage is you can get approved for as low as 5% down and maintain similar rates to that of a conventional mortgage. And then on the other side, a conventional mortgage, the advantage there is you're going to get those good rates and you're going to have a much smaller mortgage to deal with than the person who is doing an insured mortgage. Because if you're looking at that 5% option, as we talked about, you're putting down $100,000 less than the person who's doing a conventional mortgage. So that's $100,000 more that that person is paying on their mortgage, right? So obviously, with $100,000 more owing to the bank, you're going to be paying more monthly. So there are pros and cons to both sides, just depending on your circumstance, what makes the most sense for you.
Well, let me jump in on that, Zach.
Yeah.
So the other thing too, from an insured mortgage standpoint, you've got to keep in mind that the banks are, what's interesting is that the banks charge you the insurance policy to protect them, right? So that being said, the less percentage that you put down, less amount you put down, it increases the risk to the lender. Because if the market goes sour and the borrower doesn't pay, the bank is at risk, the less money that they have coming in from the borrower slash buyer. So that's why it's insured by a third party, which, again, we can get into. We are getting into the weeds a bit in terms of the details. However, in some instances, you cannot get away from it being or having an insured mortgage, because if you don't have 20% down, for the most part, you will be getting an insured mortgage, which gets tacked on to your original amount borrowed. You don't have to come up with that money cash. It's a debt that you'll owe over the course of your mortgage with that on that particular property. So that's about it. I know I probably confused things even more, Zach, but we're going to run with that for the time being.
All right, I appreciate it. Let's move on to the next slide here. So we just wanted to talk to you guys about what you would need to provide if you were looking to get pre-approved for a mortgage. So if you are salary and hourly, you're 9 to 5ers, if you will. What you need is to provide a pay stub, job letter, and T4 from the previous year. And then if you're self-employed and you're entrepreneur, got your own business type of situation, 2 years of your notice of assessments, and then 2 years of your T1 general. So just to give you a head start on preparation for those conversations about getting the pre-approval, if you can get those things in order, it'll save yourself some time when the time comes when you're ready to act, and which can be great if you have a particular house you're looking at that you're very excited about. Obviously, the less time you can wait trying to collect things to get your numbers figured out, the better, right? So that's something that can be a little bit of a cheat code, if you will, on timing.
Let me just comment on that, Zach. I think that is a fantastic point that a lot of people miss, particularly if you're self-employed. Get your stuff together. Most self-employed people don't have their stuff together. It's in a shoebox. The receipts are over here, like all that kind of stuff, right? And then when the bank says, we need this, this, and this, boy, oh boy, it's just a mess to get it. And then a lot of people push that off, and then they start looking for a house and they're not fully pre-approved. It could just be an unfortunate set of circumstances. So we do have a checklist that you're more than welcome to. You can ask for it. We'll provide it. That'll tell you everything that the institution or the mortgage broker will need, regardless of whether you are salaried or whether you're self-employed. So reach out anytime.
Yeah, great point. Absolutely, we're more than happy to help you. Our next slide we're talking about here is closing costs. So, if you ended up getting a house that worked for you and everything's going smoothly, come closing date and possession date, whatever you'd like to call it, there is certain requirements of you as far as the likely amount of dollars that are going to need to go out that aren't tied into the house price. So if you pay $500,000 for a house, okay, that's $500,000 and plus whatever you put down for your down payment. Then you got to start looking at the closing costs. Now, what is required? You are required to show 1.5% of the purchase price for closing costs. However, you likely won't spend that full 1.5%, or in most cases you don't really get close to that 1.5%, but you need to actually show that it's available and there. Now, the next piece of the puzzle is land transfer tax. And to give you an example, we've actually posted a land transfer tax on screen there for you to see. They have calculators online you can access. And just to give you a quick example, if you're buying a house for 500,000, the land transfer tax comes out to $6,475. However, there are first-time home buyer incentives that can give you up to a $4,000 rebate. So that is obviously a significant amount of money, especially for those of us looking at first time home buying. So you definitely want to look into that and what's available to you when you're in the process of buying your first home. When we're looking at legal fees, you're typically going to be in the realm of $1,500 to $2,500. We recommend putting aside the 2,500. Again, not a number you typically will go up to, and you're typically going to be closer to that 1,500 versus the 2,500. However, if a snag comes up and you need your lawyers to start working on your behalf to, get through a little bit of a negotiation or an unforeseen issue coming up, it's good to have that money put aside, and then you're not scrambling to find extra money to pay your lawyer to do something that's required for you to get the house that you want. All right, so we talked about the first time home buyer programs. There are four main ones here. If we go into detail on all of them, it would run this quite long. So if you do have any questions, by all means, let us know. We can send you either a link that describes each one of these in detail, or we could sit down and talk to you about each one, whatever would be your preference. But these are the four: your home buyer's plan, first time home buyer incentive, first time home buyer's tax credit, and the tax-free first home savings account. So all these can be useful in their own ways. So definitely things you want to take advantage of and learn about. And again, we could provide you links, or we would be happy to chat with you ourselves. So just feel free to reach out, and we'd be happy to do either of those for you guys. Just in a quick recap of what we've talked about so far, and give you guys a little bit of a moment to breathe and us a chance to sip on some water. So number one, choosing a realtor or ending up with one, as we spoke about, very important decision, and the strategy that goes into that is definitely something you want to give some thought to. Number two, understanding the steps in your journey and knowing what to expect as you go along the process of buying a house. Choosing between a bank and a mortgage broker, and then knowing your numbers, as far as being prepared for pre-approval, getting that pre-approval done, and having a full understanding of what your profile looks like going into purchasing a home. So that way you're looking at the right and appropriate homes for your real budget. Okay, we're going to look into searching for the right home now. What does your real estate journey look like? The first step is viewing homes, right? You got to look at houses to buy one. So the first thing we want to talk about is getting emotionally attached, both from the positive and the negative sides, right? When you walk into a house, the natural thought might be, oh, we don't want to get too attached because, if we get too attached to a house, then, we maybe will throw ourselves off in the negotiation and things of that nature, which we totally understand. However, on the other side of the coin, in order to purchase a property, we really think it's important to emotionally and however you kind of see whatever process you have to go through to see yourself in a home, and how you live and kind of what your family would look like inside of that house is very important, both from the positive and the negative. If you're looking at, for instance, you have a family of you and your partner plus 3 or 4 kids. If you have this tiny little entryway as you step in the door, and there's no coat closet or foyer of any kind, what's that going to look like as the kids all come home from school and you're coming in from work and things of that nature, right? On the other side of things, you picture yourselves in what parts of the house do you spend all your time? If you're spending all your time in your kitchen, but the house is a little galley kitchen that two people can't even be in at the same time. Not that those aren't workable for people because they are, but if you've got a family of 5 or 6 people, that is a challenge. And then you start thinking about the pots and pans as you're trying to make this big dinner for everybody might not be the best fit, right? So those are things we really think are important to consider among others, but just start that process of thinking through what makes sense for you and your family based on how you spend your time and what rooms you typically occupy in a house. Now, when we go to the second point, don't feel like you need to see every home. Let's say, as an example, you are approved for a $600,000 purchase. Just because a house comes up for $599 doesn't mean you need to rush out and see it. Like your time is important, your time is valuable. So we don't want you to feel like you need to just see everything that pops up because if you have a absolute need for 4 bedrooms, or you have a need for an open concept kitchen, or a fenced yard, or double car garage, whatever your criteria is, if the house doesn't fit those criteria, then you're wasting your own time by going out to see these houses that have deal killers built into them. And being aware of those is very important. So if you bring a house to our attention, we will know your deal killers and what's crucial for you to be comfortable with a home. We'll make sure that those things are there. We'll look into a house, do our research, and we'll be more than happy to tell you, hey, up front, this house, we don't think it's going to be a great fit for you because it's this, this, and this. And you can take that information in. And if you still think it's worth going out to take a look, absolutely, let's go. But if you hear that information, you say, oh my gosh, there's no way. We just can't do it. That's never going to work for us. Perfect. We've saved you your time and you don't have to, another part of it is just getting your hopes up, right? You see a house, you're getting your hopes up. This could be the one, etc. You go in the door and the first thing you see when you step in the door is an automatic no, right? So obviously not a great feeling there. Our third
Zach,
point,
I just want to jump in on that a little
yeah,
bit.
absolutely.
You often say, I hear you say all the time, look, if you have a king size bed and you have an 8x8 master bedroom,
Right.
maybe it doesn't make sense to go out and see that house unless you have a chainsaw and you're willing to use it, right? I mean, at the end of the day, you got to be careful. And give you a quick example. There are certain neighborhoods that have homes that are relatively close to the road. For example, let's say you're interested in a townhome. Well, some townhomes on one side of the street have no sidewalk. On another side of the street, they have sidewalks. And if they're built relatively close to the road, the front of the houses, you may not be able to fit 2 cars back to back if in fact you have a sidewalk. So that's part of the things that that we're referring to, is actually referring to here. It's really important to understand what you value, what's important to you, how your family functions, and then we will always keep those things in mind so that we can basically advise or guide you as to, yeah, that house there, I know you guys have 3 cars, but it has a very short driveway and it has a sidewalk and there's no place to park in the winter. So you decide. We'll still show it to you, but those are
Yeah,
the kind of things that I think are important to identify prior to going out and seeing houses.
absolutely. We do this on a regular basis with all our clients, and it's extremely important because, like we said, you guys have busy lives, and you have that one fragment of time per day that you get to yourself, and you use that to go out to see a house that was an absolute dud for you personally. So we just don't want that to happen, and obviously you don't want that to happen either, right? So we're working together to try to make sure that you only see houses that have a realistic shot of being the right fit. So these
Yeah.
not the sorry, what's that, Neil?
No, I just said, yeah, I agree,
Yeah,
100%.
yeah, exactly. So the 3 and 4 on this slide, points 3 and 4, work it together. So we're going to jump into the next slide just to show you what we have here. So we believe in using a rating system to help you figure out what's important to you. So this is just kind of a standard one, but we very obviously very easy to, you know, edit these to the criteria that are very important to you. So what we say is rate every category we put on here up from 1 to 10. And the thing is, a lot of times people end up seeing many houses, dozens sometimes, and it's hard to remember or even within one viewing session, maybe you see 5, 6, 7, 8 houses. Sometimes it's hard to remember, hey, what did that first house have again? Like you start having that type of thought. So we recommend using this rating system to help you recall, right? And then, you see a house and you're like, that's a pretty good house. Now you've built a kind of floor. Like it's got to hit minimum 55 out of 70, or else we're not going to be interested. Because we saw one that was 55 out of 70, and that was borderline for us. So you start building this, and you can again edit these to your specifics. So if there's if you need open like layouts kind of in there, but if there is something a little bit more specific, like you're looking for certain aspects in the basement, you're looking for certain aspects outside. There's a exact square footage that you need, locationally, you're not sure. So you can edit this exactly to your specifications, and then track each of the houses that you go through. And it's I think it's a good um, tool to use, and you and your partner can just kind of sit there together, or if you're not with a partner, whoever's helping you with your decisions, you can go through it together and just say, what do you think about this, this, this? And it's a nice way to have the conversation to review a home as well.
Yeah, and sometimes there is just an outlier. It's like, my God, this is like 9 out of 10 on every front, and everybody else is ranging between 4 and 6s and 7s. Well, there isn't much thought required. Whether you want to buy it or not, but which one is the best? Yeah, it'll be very, very clear if you use this rating system.
And often I find if you're seeing 5, 6 or more houses in a day, it's often a good microcosm for your market niche as a whole. So if you're seeing 6 houses, one is a knockout that's like a 65 out of 70, and the others are all in that 40 to 45 range. That's like Neil said, that's screaming at you to move on the 65, because if the rest of them are showing that type of score for you, that's starting to tell you about what this piece of the market, this price point and location is going to typically offer. So if you see something that is just breaking away from the pack, that's just something that's looking like a screaming value, and you want to make sure you
It's a good point.
you give it your best effort to try to look into that one, because you don't want those ones to slip away, because who knows how long it is again before something hits those types of numbers.
Yeah.
Okay, so we're going to talk about so we actually have a buyer book that we provide to our clients that walks you through the different steps. A lot of the actual topics we're covering today are actually in the book as well. And these are a couple pages that are from the book, and we'd be more than happy to send you a copy of our book. So just by all means, reach out and let us know that that's something that you would like from us. These particular pages reference a point we were just speaking about, and that's features that might be important to you. So just to touch on some other you know categories, if you will. We've got type of house, so that is, you're looking for a detached, a townhouse, or you're looking for what type of home is best for you. Then you're talking about style. Are you looking at 2 stories or bungalows? Are you looking at, do you like something more traditional, or are you looking for that open concept style that everything flows more so than having everything as a traditional room? And location, are there certain locations that you need to be in for work or for family or for schools? All those topics are very important. As you can see, there's even more on here. I'm not going to go through every single one because I don't want to take up too much of your time, but these are important conversations to have and figure out, because unless unless your budget is like 1.5 million, you're going to be sacrificing somewhere, right? So you really want to nail down what are the priority categories, and there's usually going to be 4 or 5 things that you have to have, and getting those figured out are great. And then you can have a want category after that. Okay, so if all the houses are hitting our what we absolutely need, okay, what are the next 3 or 4 things that we would really want to have but aren't 100% priority, but it would really help improve our lives, type of thing, right? So having those conversations and understanding what you're looking for heading into seeing houses, very important as well. again, just talking about where to live, the different, neighborhoods or towns, if you will, around the Barrie area, they all provide their own types of advantages, right? You're looking up as far as Muskoka, if you're looking for something that's more of a cottage of a second home, or maybe you've got some work that's leading you up north. If you're looking in Midland and Penetang area, they're much more affordable homes than you'd be looking in Barrie. If you're looking to have access to Barrie, but you want to be in a rural setting, you've got Clearview, Springwater, Oro, Essa. If you're looking to be a little bit closer to Toronto, you've got your Innisfil. And if you're looking to be north of Barrie, but you still want that city feel, then you've got Aurelia, right? So there's all types of options. Just really depends what you're looking for and what suits your personal, um, kind of where you're at in your life right now and what would work best for you. There's really an option for kind of everybody in and around this area. So that's definitely a good, very good focal point to kind of bounce off of and just see what might work for you. Okay, so now that you've seen the homes, you've done all that, now you're choosing to put an offer in. The steps that we're looking at is the number one, market research. So we want to make sure that you're not overpaying and you're not lowballing and insulting the owners, because obviously we want the best deal possible for you, but on the other side of things, if you come in too low, if someone's listed for 500 and you offer them 360, think of it, if you're on their side, how willing would you be to engage with that person who just undershot you by 140,000, right? So those are key things to understand. And as a part of that, we contact the listing agent on your behalf to discuss the seller's timeline and motivation. And a lot of times when we have these conversations, since we've had these conversations hundreds, if not thousands of times, we know, what questions to ask in order for the listing agent to reveal information that will be helpful for us to get you the best deal possible. Now, the second piece is, I kind of touched on it already, is the timeline and motivation of the seller. Because if there's someone who, let's say, lists their house and they don't need to move and they're just doing it to test and like, hey, if I get my number, I get my number. However, there's other people who have been relocated for work or going through a divorce, or whatever the case may be, that is putting urgency on the situation. Then those are cases, if they're not selling, then that's an opportunity to get a good deal, right? And those are the types of, we ask questions to really get details on what their situation is to help us understand and provide, and then that way we can create a strategy that will get you the best deal possible. The next step is discussing offer conditions, which we'll go into on a later slide, but the standards are your financing condition and a home inspection condition. Again, I will touch on those on a slide coming up here. And then next step is negotiation strategies, and not just the price. You're talking about, what day you want to get possession, what conditions you want to put in, what items that the homeowner has in the house that you want, as far as appliances and things of that nature. So there's those things and more that you would be discussing as negotiation strategies, as well as the price. And then number 5, coming back to our first point, is you want to tactically choose the best price to start negotiations, because there are some people who are just one shot, right? They just want, give me your best price, I'll give you my best price, let's see if we line up. However, there are other people who feel they need to negotiate in order to like justify that they did what they could, right? So if those people aren't the best for you to come in with a, hey, this is my one-time offer, this is the best I'll give you, they are people that you need to do those little incremental offers with, for them to feel like they have done justice to their home. And that's why tactically choosing your price point based on the conversations that we would have with the other agent are very important, to obviously get you the best price and also make it as smooth as possible for you, so it's not too stressful of a situation as you go through those negotiations.
Zach, I just want to jump in on that one there.
Hmm.
So recently we had a situation where an agent showed one of our listings, and it's almost verbatim what you're saying in terms of dollars, not quite, Zach, but we had a property listed mid 500s, and excuse me, and they came in at 425. So the agent didn't test us to see if we could give them some insight, although we'd never reveal a price point, but we would certainly jockey position for our client who were selling their property. But this person came in, and when our client chose not to reply because they found it an insult, just because the agent missed one critical step that Zach's talking about right here, they now are upset that we're not negotiating with them. Well, they didn't take into account how we might feel. They just looked at the market, thought, oh, we want a deal and their house is on the market, so we're just going to take a low stab at everybody and see what happens. Well, we're all human beings. We all have feelings. We all have expectations, and we all also all get insulted. So in this case, that insult translated into the homeowner not willing to negotiate with people that came in at a ridiculous price. And clearly, the agent didn't do any research. They couldn't justify the reason they came in at the price it came in at. So it was a big chasm between them and us. And the deal, it really never even got started. There was no way to negotiate that because our clients were just so upset at what these people came in at. So there's a little example of what Zach's talking about
Yeah,
here.
no, perfect anecdote for that topic. That's exactly the risk that you run by trying to come in too low, um, and you ruin your chance of getting a good deal altogether because the strategy, right? So a big thing for us
Strategy
is
matters, man.
that's right.
Strategy matters.
That's right. Exactly. A big thing for us is how much strategy comes into play in this crazy real estate game.
Yeah.
Okay, so we just want to talk about, give you an example of what some of the stuff that we use to find good deals, right? For you guys. So things that you want to keep in mind are just like there's indications, right, of what um, will lead to you getting a good deal. Just to give you an example of a house, it's, as you can see, listed for 750, sold for 700. That's great. But things you want to look at, how many times has it been on the market? So a lot of times it will come off and come back on. And then how long was it originally listed for to when it sold? So this one, you're looking at, 53 days on the market, which is an excessive amount of time, right? And so you start looking into these details, and those are the ones that where you can find the right deals. Or there's certain people who, let's say they've been on the market for 3 months, but they've never changed their price. Now, some people automatically think, oh gosh, they must want exactly what they're asking for, which, fair, they might, but there's also plenty of people that we've dealt with over time who just don't want to reduce. And they say, we'll deal with an offer when it comes in. We're not going to reduce our price. So, you know, those are also ones you want to target, right? For potential good deals. If something's been on the market for an excessive period of time and they've never reduced, it doesn't mean that they won't take less. Just maybe that's just part of their strategy. They don't want to do reductions, and they would rather keep it at the price and just deal with a lower offer when it comes in. So again, asking the right questions, doing the right research leads to good deals. Okay, preparing the offer. So we just wanted to talk to you about the different markets that you can be in and what different types of offer types there are. So, going back to COVID, we were in a market up until early part of 2022 where there was offer dates consistently, which means people are taking a house that is worth 500,000 and lowering the price ridiculously to say 399. And now everybody who's looking for a $500,000 house, like, oh my gosh, this house is listed for 399. We got to go see it. Now, people did this even though they knew that wasn't the price. They would still rush out to see it. So it's one of those things where it was a strategy that not everybody agreed upon, but it was an effective strategy that always got the best numbers as far as sales go for sale numbers. However, in a market that we're in now, the market is not in that state. So you see a lot more of what we call top down, where people will, if you're looking for 500, you list your house for 524 or 549. And then as offers come in, you do a negotiation and hope you get to that 500, right? As just as an easy example. Going into offer types, we already talked about low ball, where you know a $500,000 house you're offering 360. Fair price is if they're listed at 500, you come in say somewhere between 15 to $30,000 under the asking price and negotiate and meet in the middle. Typically, obviously, that depends on price point, right? Like that's more of a $500,000 example. If you're looking at something that is like $1 million, it's going to be different, right? Because your average sale price is about typically between 97 to 98% of the asking price. So you want to come in maybe 95, 96%, and you're looking to meet between your 95 and their 100 at that 97, 98. That is kind of how the fair price option typically goes. And then over asking, if you get into a multiple offer situation where you're competing against other parties, you're going to end up going over asking. And there's different strategies that go into that depending on how many people you're competing against. And we'd be more than happy to chat with you about that at length. But this, again, we're aware of your timing here, so we don't want to get too much in the weeds. But there are strategies that go into the over asking strategies.
Zach, I just want to jump in on that.
Mm-hmm.
So when it comes down to, and Zach hit it on the head, the average, what we call list to sale price ratio is, depending on the price point, 97% of the asking, 98% of the asking, sometimes 96% of the asking. However, when he was speaking earlier about doing the research, that's the biggest indicator because somebody could be priced right on the value of their home. And that research is going to aid us in determining whether or not we go in right at that price, or if all the research indicates that they are, drastically over those examples Zach was giving you earlier, where, they're significantly higher, they won't reduce. Well, you wouldn't go to 98% of the asking of that particular property. You might go to 90% because they're drastically over and our research supports that. So when we negotiate with them, we would produce the research that we did to say, look, we're not here to insult you. We've just done our due diligence. Here's the information that supports the price we're coming in at. And therefore that would defy the standardized 97 or 98% of the asking price is what you would offer. I just wanted to make that distinction.
Yeah, thank you. Appreciate that. That's great. Okay, let's look at our next slide we have here, which is just the steps of preparing the offer. So we just want to get you guys comfortable with the terminology and what steps happen when you're looking at making an offer on a home. So of course, your first thing is price. Figuring out that tactically, figuring out that opening price based on the conversations that we have with the agent, the research, and then coming back to you and having a collaboration, putting our heads together and figuring out what might be the best strategy. Next up is irrevocable. So that is the time in which the seller would have to look at the offer, and it has to be presented to them by their agent within that time frame. The next point we have here is closing, which is your date that you would get possession of the property. And your fourth point here is conditions, which we are going to get into on a slide coming up here. Inclusions, exclusions, a very easy way to understand what this means is when you're looking at a house, inclusions would be, so things that are screwed or bolted down to the house are automatically included. They have to be put into exclusions to not come with the house. So when you look at inclusions, things that are not screwed or bolted down, for instance, a fridge or like a microwave that's sitting on the countertop or a stove, etc., right? Washer dryer, those types of things. Or if there's certain furniture you liked in the house, those types of things. And then you would have to write those into inclusions to have them come with the house. And again, exclusions would be anything that's bolted or screwed down that you didn't want to come with the house or the seller didn't want to give, that would go under exclusions. Just a quick visual. This is what the offer looks like, agreement of purchase and sale, and this is the first page that you'd be looking at. So we just wanted to give you a quick visual as to what it looks like, and that way you can just have a little bit of an understanding of what the paperwork would be looking like. All right. So when we negotiate on an offer, we offer something to the seller. Now that's what can happen from there. So they can outright accept it, outright reject it, or counter it based on the terms, right? And then on top of that, depending on what happens, with regardless if it's accepted, countered, or rejected, there's steps to come after that, and we will be working with you every step of the way to guide you and help you understand what's to happen next, and what you know if you make this decision or that decision, what happens going from there. All right, so you have an acceptance. Yay, they accepted your offer. Wonderful. So the first step we want to figure out is, was it a firm offer with no conditions, or did you have conditions put into the offer? Next step is the deposit is required 24 hours after acceptance of the deal. And a deposit, for those of you who don't know, is within the first 24 hours, you have, a phrase I've heard before is you have to have some skin in the game, right? So if you put a $1 deposit down, you could walk away at any time, and that's no skin off your back, right? It's $1. Most people can walk away from $1 feeling okay. But if you are putting down $20,000 and you go through the conditional period and everything is great, but after that point, after the conditional period has expired, between then and the date that you get possession, if you walk away, you will lose your deposit money. As long as it was nothing that the seller did to make you do that, to make you walk away. If they had some malpractice of some kind, that's a different story. But if you just got cold feet, or you changed your mind, or you wanted to look in a different location or whatever, you walked away, then that's when you would be looking at losing your deposit. So a deposit is required to be put down. In the Barrie area, you're usually somewhere between 15 and 30,000, just depending on the price of the property. So that's something that you want to prepare yourself for. And what happens then is, if let's say let's use 30,000 as an easy example, and your down payment was going to be 100,000, then on possession date, when you're giving your money over to the lawyers to transfer, you would only be giving the lawyers 70,000 because you've already paid the $30,000 deposit. So the deposit is part of the down payment. So it's not like you're paying deposit on top of your down payment. So that's just something we wanted to make very clear. All right, so now the conditional period starts then the following day after the acceptance, the following business day. And then you have the lawyer receiving a copy of the offer so they can get their process started. And it is important to get your lawyer decided on as quickly as possible to make sure that there's no rushing at the end and, any type of stressful situation.
Zach, I just want to jump in on that deposit thing for a quick sec.
Mm-hmm.
So, Zach just gave you a hypothetical kind of surface level example with respect to the deposit. And let's just put it this way: there are many more implications, and we're not in a law class here, so these are examples and just to kind of bring to light certain circumstances. But we're not suggesting that if you wanted to walk away because you saw a better house and you're willing to leave your 20 grand behind, that you would not be exposed to a potential lawsuit for walking away from the deal, and it would be only your deposit that you'd be leaving behind. That is not what we're saying here. It's very important to realize that if you walk away from legal agreement, your deposit can very well be the thing that you lose, but would be at a bare minimum. You could be sued by the homeowner in the event you didn't close the transaction. Because let's face it, on the strength of your purchase, particularly when there are no conditions, what happens? That homeowner has made decisions to purchase another property, quite probably based on the strength of your firm offer. Now, if you walk away, guess what? There's going to be a domino effect that they can't close their deal. Those people can't close their deal. So it could be a catastrophic fail. Just wanted to dig a little bit deeper on that because I know these are just, again, basic examples that we're sharing. But by no stretch do we want to suggest that, you walk away from your deposit and that's all you lose. It could be much, much more. So you got to make these decisions very carefully.
Great. Yeah, great point. There's definitely more that can be done. And Neil gave a great example there, but if you ever want to get a little bit more detail on what the consequences might be, we'd be happy to sit down and talk to you about that.
Or connect you with a lawyer. You know, we have
Yeah,
a number of them. You
100%.
can check your own. Yeah, just it's important to do the due diligence, particularly on points like that. You know, make sure you know what the landscape is before you start. You don't want to bring sandals to a rocky field, right? You may want to put some work boots on. So let's just make sure that we know what we're getting into, when we're getting into it, and how we got to prepare for it.
Yeah, perfect. Okay, let's get on to our next slide here.
All right.
So we've been talking about the conditional slide. So here we are. So the two most common are your financing and your home inspection. So the way the financing works is you do not actually have to provide anything to the other side. So they don't get to see any of your personal information, nothing of that sort. All that you have to do is we would sign a document which is called a notice of fulfillment, which tells them, hey, we're fulfilling our condition on the financing side and we're ready to move forward from that condition. Now, what you want to be doing in that time frame, which is very commonly, like 95% of the time, 5 banking days. So no weekends or holidays are included in those days. Is you'd send the mortgage broker or your bank the offer that you and the listing that you're looking at putting an offer in on, or that you have put an offer in on, and they'll start working on the package and get all the information out to the institutions. And it typically will take about 4 or 5 banking days for them to get you approved, get either approval or a denial on whether or not your financing comes through. And in some cases, there might be a requirement for an appraisal to verify that the value that you're paying for the property is something that the institution deems to be fair. And if everything goes well and you get approved and they think the value is fine, then you have the option of removing that condition via the notice of fulfillment. And again, no information on none of your personal details will go to the other side. It's just a document saying we're removing this condition. Now, going into the home inspection. So the way the home inspection works is you and I go see a property. You see there's 4 cracked windows. You see there's a crack in the foundation. You see it's an old furnace. Now, after you do a home inspection, those things are going to be noted on the home inspection. But what's happened is you bought the home and you purchased or you put in your offer based on what you've seen. And if you've seen things with the naked eye that is assumed that you can see with the naked eye without needing any type of training, that you bought it understanding those features about the house. So when you go into a home inspection, that's not going to be something you're going to have much success negotiating after the home inspection, because that's something that was very visible when you went through the house. However, if you put an offer in and there ended up being, say, mold in the attic, there's no chance you would have known about that. Or, there's some internal issue with the furnace that you couldn't have seen just by looking at it. Those types of things that are unseen to the untrained eye. Those are things where we can go back and go to the other side and say, hey, we need to renegotiate this price based on this, this, and this. We're going to get a quote done and that type of thing and get real numbers. And then that's when a renegotiation could happen. So there's 3 options. You have nothing to fix. You can get them to pay for the problems that were found and get them to bring in people to do it, or you can get the price adjusted and then you fix it once you get possession of the house, just depending on what you think is best for you. We typically recommend that get the price adjusted and you fix it, because that way you have control over who's doing the fixing, and you can bring in somebody that you trust, not someone that the other side has picked and you just don't know their qualifications and their history and what type of quality they do and that type of thing. So, all right, you bought a house. You look at the excitement. Woohoo! Confetti falling from the sky. All right. Everything you want to focus on going forward is you're packing, you're signing your papers with the lawyer, and you're making sure you're getting utilities changed over to your name, because last thing you want is you get the possession of the house on May 1st, as an example. You get in there, there's no heat, there's no electricity, right? Because there's nobody, because they would have switched out already, right? So you got to make sure you're switching the utilities of that property to your name, which is something you absolutely can and should do before you get possession of the house. Okay, so the next step here is our team is a slogan that we have is our team is there every step of the way. I'm sure you've heard us say that multiple times throughout this presentation, and we're there for our clients every step of the way. It is absolutely true. So after the deal is completed and you're just waiting until the closing date or the possession date, we assist you with whatever you need. We have contacts in every field you can imagine in real estate. As Neil spoke about earlier, he's been in the business for over 40 years. I've been in the business over 10 years. We've got lots of people that we've come in contact with and used in our own personal life that we have utmost trust that it's going to be high quality and just very trusted people that we can recommend to you. Again, in any category you can think of in the real estate sphere. And once you move into the house, for those of you, I'm assuming most of you that are first-time home buyers here, but even if you're not, we have a checklist that we are sending out that make sure that helps you stay on the maintenance side of things, because last thing you want is not paying attention to those little things that will over time wear on your house and cause you issues down the road, which obviously are things you don't want, and you want to stay on top of the maintenance to keep your house in that high quality that you're looking to have, right?
Zach, I just want to jump in on that. Like if you've never owned a home before, you may not think that, oh, your pipes may freeze, your outside faucets the water in them may freeze, they may bust open, they may cause a leak in your house, leaves in your eaves trough could dam up, and so many different things depending on the season. You need to pay attention to your home if you've never owned one before. And these checklists are little nudges and reminders of things that you really should do to have a status quo. And to Zach's point, other maintenance issues as well, and enhancements that could help you increase the value of your home.
Absolutely. Okay, so we're almost at the end of the webinar here. We just want to do a quick recap for you. You're going to get our step-by-step, you can get our step-by-step guide for the home buying process. As you can see, an example of our home buying book right there. Contact information for the following. We've got trusted people that you can absolutely count on. We've used time and time again in lawyers, accountants, mortgage brokers, home inspectors, appraisers, any type of contractor, all of that type of thing. Financial worksheet that breaks down the cost of home buying, and if you're looking at selling, that we have that as well. Access to our library of downloadable reports. Also, we have a video library of these different types of reports that are breaking down into really easy to digest 2 to 4 minute videos. Very easy to sit down for that amount of time. We know not everybody has time to sit down for a 30-minute YouTube video to watch on a singular topic. So we made sure to break those down into 2 to 4 minute bites to condense the information as much as we can, while also conveying everything that you need. Also, we have those same downloadable reports and videos. If you do know people who are looking to sell, or if you yourself are looking to sell, at some point we have access to reports and videos that can be very helpful in the selling world as well. All right, so here's some examples on the screen here of our videos. As you can see on the bottom, 2 minutes and 32 seconds. There's a 401, 153, all very short and easy to understand, and as you can see, nice important topics there as well. All right, these are the main members of our team here. As you can see, Neil and myself, followed up with Karen, Don, and Mike. Karen and Mike are licensed realtors as well. Karen also is a key member of our administrative team as well. Don is our office manager who kind of keeps us all afloat. And as you can see on our little notes there, Neil started this whole thing back in 1984. We've sold over 2,000 homes since then. servicing Barrie and surrounding areas. As you saw on the map we had earlier, where we go all over Simcoe County and beyond. We have a massive administrative team. How many do we have on the team now, Neil, on the administrative team?
We have six people that help us help you. Like all of our clients are supported not only by ourselves, but by our admin team. So we're very responsive and make sure all I's are dotted and all T's are crossed in a timely manner.
Absolutely. And then on top of that, we have a dedicated marketing department and also a programmer and IT support. So we are really a one-stop shop when it comes to real estate. And yeah, that's kind of the history and the current status of our team. And we are they're all very excited to help anybody that is looking to buy their first or next house. Okay, so this is the end of our webinar. Thank you so much for being here with us and sticking out. I know it was a bit lengthy, but we really do feel all the information we shared here today was vital, and we wanted to make sure you guys all had access to it. So thank you so much again for coming, and it's been a pleasure from our side.
Yeah, take good care and reach out at any point in time.
Take care for now, guys. Have a lovely day. Bye for now.